Welcome back to the first ever installment of Clickbait and Coffee with TCI, baby. I'm just playing, but that was a good catch line. Okay, so let's dive into what is going on today. We have some groundbreaking SEC news that we have to go over because this is very significant. We do also have to talk about the Fed and how the markets are kind of pricing this in, as well as what is going to happen with AMC, as well as the small to mid cap stocks after this SEC meeting. I think you guys will be very excited about what I have to say. We also have to talk about the short interest that is pretty much at all-time highs and all of the other data that you guys need to know. So drop that like on the video, consider subscribing to the channel, check out the pinned comment down below for the buy and sell alerts if you guys want access to all of my trades in real time, and if you want me to kind of be your instructor but not your financial advisor, you can ask me questions over there. I'll give you my input on trading strategies and teach you whatever you need to know in that realm if you guys do need help. I want everybody to have a grip with options because it literally gives you options when investing. Like, options gives you options. Kind of crazy, kind of cool, but let's dive into this video. So AMC is up 1.5% roughly at the time of this recording, sitting at $16.28 per share. Now, all eyes are on the Fed. I cannot stress this enough. The markets are seeing a bullish reaction right now, which you typically do see before Fed meetings because people are kind of like, hey, is all of the pain priced in? And in my personal opinion, there's multiple reasons why the market has been selling off. Like we have talked about here on this channel for a while, what analysts are starting to say now is that these trading algorithms might actually be pricing in slower revenue growth in 2022 or even year over year negative revenue growth and are starting to sell off stocks. Now, if Fed Jerome Powell comes out, this is very important. Make sure to write this down, whatever you guys got to do. But if Fed Jerome Powell comes out and he says, yeah, we're just going to hold off on everything. The economy is starting to slow down. We're not going to, start tapering or end tapering. We're not even going to start raising interest rates. But really, it's interest rates that people care about. Because if he comes out and says, hey, we're going to end tapering, but we're not really thinking about raising interest rates yet, that's going to be very, very bullish. If any one of those two things happens, that's full green light, buy stocks again, and that's what the trading algorithms will do. Now, if Fed Jerome Powell comes out and says we have finished tapering, that sets them up to raise rates at any time. That's going to be negative. If he comes out and says, yeah, we're just going to raise rates a quarter or a 0.5%, expect a wildly bloody day for the rest of the day and probably for the next couple of days. So those are really the two ways this can actually play out. Or he could just go along the expectations of what we have expected. And in that case, I would expect to see very volatile moves, but not really to choose one direction or the other. Probably if I were to throw a wild curveball out there, throw a wild guess out there, we might start to go down, but it wouldn't be as violent if he chooses a direction, bullish or bearish. So that's the scoop on that. That's what to know as far as the Fed meeting. The actual report comes out with the Fed dot plot, which is like literally a dot plot of what the Fed wants to do as far as raising interest rates, let the balance sheet run off, balance sheet just reduction, maybe selling assets. All of these different things the Fed has to do, and you have the different Fed members that will place their dots on where they think or when they think the action should actually happen. So we'll go over that in the video later on today. If you guys are confused, definitely stay tuned for that one. That's going to be important, as well as if they do plan to raise rates or whatever they plan to do, that will come out at 2 p.m. Eastern Standard Time. So in about 2 hours from now, you will see that first initial reaction with the markets either up big or down big. Don't be confused, because once Fed Jerome Powell comes out at 2:30, that's when the markets are actually going to start moving in one solid direction or the other, whether it's to the upside or to the downside. So hopefully that gave you guys a brief overview of what to expect from the Fed meeting and the Fed report coming out at 2 p.m. It's going to make AMC move as well. So if it's bullish, AMC is going to be very, very bullish. The small and mid caps are going to go wild. The short interest is through the roof on the small and mid caps, and people, retail, are not buying the small and mid caps. They're just not doing it. So the stocks that used to be retail stocks no longer are seeing retail buying power. So that money will flow back into those stocks. Shorts will be forced to cover, as well as hedge funds will be buying those stocks. So I think that's really where the opportunity is in the small and mid cap stocks for the potential upside. For the downside, it's going to be your indexes as well as your large mega cap stocks, because those are the ones holding up the markets. Now take a look at this while we are on the main page, how AMC rode the meme stock rally to revitalize its business. This is a front and center piece on CNBC. It says the key points: while AMC's entertainment share price has fallen in 2022, the company has a clear path to profitability that wasn't available just a year ago. Bolstered by retail investors and a meme stock frenzy last January, the movie theater chain escaped bankruptcy. These retail investors made it possible for AMC to amass more than a $2 billion war chest. The movie theaters chain's next focus is on repaying its debt and lowering interest costs. Hopefully this makes you guys proud in some way. Just know the money is a byproduct of saving the business. So hopefully it does make you guys proud in some sense to have saved this company, saved the jobs, and ultimately make a lot of money once that does come around. So pretty cool. I just wanted to throw out there for you guys. Now circling back to the Fed just for 1 second, this is the January 26th meeting. This is investing.com, and this is the Fed rate monitor tool. So only 3.7% of analysts expect a between 0.25% and 0.5% rate hike coming today. So a very small amount. If that does happen, like I said, markets would sell off, but widely expected to not happen. For March, you are seeing about 93.4% of analysts expecting a 0.25% to a 0.5% rate hike. 3% of analysts saying no rate hike, and then about 3.6% saying in between a 0.5% and almost a 0.75% rate hike. So definitely, Jerome Powell could throw us a curveball here. He'll probably walk the narrow line like he usually does, but that means there's still opportunities out there like crazy, and do not squander all these opportunities that are available to you. Now, as far as this whole SEC situation, this article says, U.S. SEC claims to gather more details on hedge fund strategies' use of leverage, among other details. They did have somewhat of a meeting, a dialogue back and forth between SEC Gary Gensler and some other people today, where they did talk about a wide range of things, but this is the main headline that is coming out. So it does say that the U.S. Securities and Exchange Commission will propose new rules on Wednesday to boost hedge fund and private equity fund disclosures as it looks to increase oversight of the private funds industry and better monitor systemic risk. Now, you can attribute this to something like Archegos. That was not a public fund, that was a family office. So the SEC really had no insight into what they were doing. And a lot of these people, obviously, they trade stocks that are on the lit exchanges. So we could have a ton of shorts that are in AMC short positions, but don't have to report because they are private equity funds and they don't have to go through the same disclosures that public funds do. And if you take a look at this, it says the proposed changes to the SEC's foreign private fund PF rules would require private funds to disclose details of material events within one business day compared with current quarterly or annual requirements depending on the firm. From PF is primary way private funds disclose purchases and sales of securities to the agency. The draft rule would also reduce the foreign PF reporting threshold for private equity advisors from $2 billion in assets under management to $1.5 billion in order to capture more firms. While the data would not be publicly disclosed, it would help regulators better spot signs of trouble such as big losses, significant margin, and counterparty default events, material changes in prime broker relationships, and other events associated with withdrawals and redemptions, the SEC said. So I personally think this is a big win. The more you can crack down on hedge funds and equity firms in general is definitely going to be a win for AMC, because we all know everybody's got their hand in the cookie jar. And even if you're a firm less than $2 billion of assets under management, if you have a large AMC short position or a long position in anything really, if it's a substantial amount, a couple $100 million, that's a big deal, and that's going to move things a lot considering AMC's market cap is in between 10 and 15 billion dollars at the time of this video. So quite substantial, and I do think that is a big win for apes. Now, as far as the Ortex data is concerned, we're looking at 20.69% short interest of free float, 106.16 million shares that are sold short. Share utilization is going back up. Now it's at 73.84%. Days to cover at 2.61. So that is shooting back up again. And this is all a very, very bullish thing. If Fed Jerome Powell is dovish and comes out like he is trying to save the markets, and investors don't think he is behind the inflation curve, then just expect a monstrous rally with AMC. But ultimately, I do expect the markets to continue to go down once we do start to get those first rate hikes in March and all of that. So if you're in this for the long haul, and patience pays, baby. Like Warren Buffett says, the stock market is simply a tool used to transfer wealth from the impatient to the patient. Be patient, baby. That's what it's all about. That's the name of the game. Now, as far as the Max Pain, we are looking at $19 still, so that really has not changed. And as far as the Stock O tracker data, we have 6.5 million shares available to borrow. About 9,200 calls that are in the money, 146,000 calls that are out of the money, about 50,000 puts that are in the money, and about 47,000 puts that are out of the money. So we're definitely setting up for another mega bounce like scenario if the Fed is dovish. And I know you guys hear me just going back to the Fed over and over and over again, because this is all going to revolve around the Fed. This is like the Super Bowl of the stock market if you are not a sports person. If you're just invest in stocks, trade stocks, this is like the main event for the markets. And that's going to be very, very important. As far as how low AMC can actually go, like I've said many times, I think AMC will remain above $15 per share. But in the short term, could we fall under that for a brief period if Fed Jerome Powell is super hawkish? Sure, we could fall to $14 or $13. I don't think it's going to stay down there. Not at all for 1 second do I think that's going to happen. I think odds are we do make our way back to about $18 per share if the Fed is dovish. As far as the MACD, it's slightly bearish. As far as the volume for the day, you're looking at about 20 million for volume. Next key level after 20 is going to be that 20-day simple moving average, and that is at $21.81 per share. So that's going to conclude the first ever edition of Clickbait and Coffee with TCI, baby. Apes and ape bets. Thank you for watching. Check out the link down below in the comment section for the buy and sell alerts if you guys want to be a part of that program. We keep it inexpensive, so anybody, whether you make a lot of money or you don't, are financially able to join that. It's like $20. We're not trying to make money off of you. That's not what that is for, but it does take time to, provide that kind of, assistance to people. So that's all for this video. If you guys want free stock as well, link down below in the description of this video. Love and appreciate you guys. Get ready, baby. It's going to get very, very volatile. I will see you in the next one.